Good evening. This is the Elliott Wave weekly update for the S&P 500 being recorded on Friday, February the 7th at 3:15 p.m. Pacific Standard Time. I am going to start here on the SPX, the cash market. I'm going to start on the 4-hour chart. Interesting week that as we came in today, I this morning when I made my update, I basically was discussing the possibility that the market was going to actually rally and continue to rally, keeping itself above 6,100. Now, here in the cash market, we got up to 6,101. I thought, okay, good start. We'll do a little pullback and then we'll continue up. We'll get on up towards those next levels, which we had at like 6,102, which is where it got stuck. And that was a combo level from spot gamma. And what that essentially was telling us that there was a combination of gamma sitting that equated to that level at 6,102. And what it does is it combines the spiders, the ES all together coming up into the SPX, and that's the value given to that where those positions are sitting. It came up and gave it a look, pulled back, stayed up that way until there was that announcement about, guess what, tariffs. And another thing I mentioned this morning on the update was, on Fridays, it seems to be that the president comes out at some point mid-morning to almost noon with some statement that's going to jerk the market. Sure enough, he did. And yes, it was about tariffs again. And even though later in the day he started taking things back and rescinding this and doing that, it didn't help. And so what the market ended up doing was just getting caught up in and of itself, and it sold off immediately. It sold off tremendously fast and went down on the first trip down, was after that news, and broke the volatility trigger, which was at 60.45 here in the SPX. It retook it very quickly, and I thought, okay, let's just stand back and see what happens here. Because essentially, when you come down, you break a volatility trigger. If you retake it, then the break is considered a failure if the market would have continued to rally back, which it started to, but then it got caught up and boom. And then it went down, broke it again, and this time it started to sail lower. Now, excuse me, we got down as far as 6,019 or actually 6,020 before just kind of creeping up a little bit and then closing. Now, what's next in terms of the gamma positions, in terms of what we get from spot gamma? And that remains right now. So I don't have this afternoon's numbers. So, but right now, that large gamma position still sits at 6,000. And I don't know if it's been shifted or if it's still sitting there or if it's going to start to move down. So as I came in this morning, I was talking about that 6,000 level was major support. So I'd have to think without the updated data that it still likely is major support unless a lot of options got traded and that moved it up and out because they would have been associated with today's expiration. So again, I'm not really sure because I've not gotten the updated data. Now, in terms of the count, I made a slight adjustment because I had been leaving open the possibility that this minuet wave 2 could have still been in progress. And as it turns out, that's going to likely be the case. So what we've done is I've left the minute wave 4 in place. So the alternates that we can wrap around what's going on right now is that one, that the market is still within the minuet wave 2. And I'm just going to drop this down. So let me start first. Minute wave 3 remains in place where I'd had it. And then minute wave 4 is at the low, which was on the 13th of January. So I'm leaving that as is for here in the cash market. And then we have the first wave up, and that's minuet wave 1 of minute wave 5 going up. And then we have an ABC coming off. And then I'm going to put an X up there, which would say that we've got another ABC. And the reason I'm using this one is because that volatility trigger got triggered today. And we closed below the volatility trigger, which suggests that the continuation of selling will come in. Now, Volatility trigger, what does that start to signify? That the atmosphere, the trading atmosphere, that, how all these different traders are putting on positions, we have risk on, risk off. Risk on is normally what we'll see when they are selling the VIX and then they're taking that cash, because remember, it's a cash market. They take that cash and then they start investing in the volatility of the underlying. So what we'll see like buying calls and selling puts, but within, say, like Apple and or the component stocks within the SPX. Most often it's going to be the Mag 7, which most of them are sitting in the SPX. Now, having said that, risk off is when you're reversing that position. When you're like taking in the volatility, volatility takes a pop. So you're buying volatility and then you're getting out of this positions, which favors an upside move. When we break the volatility trigger, it's named volatility trigger because that's kind of like a reversal point. Above it, we stay within that positive atmosphere of the market continuing to rally. When it breaks, it changes the atmosphere and it starts to go in favor of selling versus buying. Now, being that we closed below it, it raises the gauge that there may be continued selling come Monday morning for the SPX and Sunday afternoon, evening for the ES. We will see. We'll see what happens over the weekend. We'll see what news happens over the weekend. And by then I'll also have, some from Sunday's opening, you start to get gauge. Now, if it's going to follow how we've done this before, we came down, closed towards the lows, which we did again today. And then let me bring this down to the hourly so I can show it a little bit cleaner. I apologize. So there was last Friday. Here was Sunday's opening. Here's this Friday, not necessarily. So we get that nice trip down, closing on the lows, but a little bit of an uptick. See how they had to do that the last add-on hour? Give it a little uptick. See what they did, the same thing. And then what happens? We gapped. Now, our next levels coming down are 6,000 in the SPX. 6,000 as of this morning. 6,000 was the large gamma 1. That's the largest gamma. So that's that support that I'm talking about. And I'm going to say that it's like the short puts sitting at 6,000. So when it breaks, you get that selling starting because they have to kind of start to cover. And so I believe if we were to gap below 6,000, we're pretty much looking at come Monday. I mean, let's just say that in the ES, if the ES gaps down and it closed at 60.49 or 60.50, let's say it gaps down 50. That's going to put it below or put it at 6,000 and pretty much wrap it up that the SPX is going to gap underneath 6,000 on Monday morning. Now, that does not mean that it's going to stay there because let's take a look. What did it do the last time we came in and we were closing below the volatility trigger and we gapped the following through the next level down, reached a low very quickly and bam, rallied. Now, but a little bit different count this time. So let's put aside the mechanics behind all of this in terms of gamma positions and options flows. And let's go to the count. If I'm going to put that C wave over here, let me just move it over so you can see where it belongs. And we have an X wave coming up. The first thing I can do is we're going to just double up and see, well, not double up, but I'm going to put in some fibs on what we might expect from that second ABC. So what we have here, we can have an ABC down. And again, it's all a wave 2. So this remains an important level because here is where wave 2 would be 0.618, retracing 0.618 of wave one. Now, okay, so I'm coming off of here. What do I have next? Well, if this second ABC is as long or as big as the first ABC, it's going to bring me to 58.97. Now, again, I'm going to flip back over and take a look at coming in today, what was sitting at 5,900? The put wall. Now, if it kind of comes down and gives a test at 58.97 or 59.08 to 58.97, well, that's essentially going to go try to test that put wall. But my thoughts is that it'll hold unless we've got additional bad market news to deal with. And what I mean by the bad news, it's like we pretty much can deal with, like when we know if on an earnings report, we get all of that. So we see that, and that can get factored in pretty quickly. But when it's kind of coming from outside, i.e. tariffs, maybe, maybe not, i.e. something else, maybe, maybe not, then it becomes a little bit more iffy. So again, I'm looking at this, and if I'm looking at straight on an Elliott basis, and I'm still counting now an extended double ABC for that minuet wave 2. Well, here's my levels. I'm leaving the rest in because these are going to still be support areas along with the 200-day moving average. We broke everything up to the 200. So we slid through the 8. We slid through the 20. We slid through the 50 on the first move down. Took them all back on the first rally, came back down, recovered a little, came back down. So interesting, moving average wise on an hourly chart, got pushed all over the place. Ending below all of it, ending with the 8 piercing and slicing through the 50 period. This is the hourly. And then the 20 coming and resting right on top of the 50. So a down opening on Monday would push that all and put this next in line. Moving average basis. Now, we're already closing just above 382 support. That, I think I just leave it there because it is a Fibonacci support level. And that gets programmed into algorithms, and that's kind of where we came down to. Why? Well, because it remained in line with some other spot gamma levels. So, and strikes within the SPX. And let's not forget the SPX, those options trade way more even the ES. The only one that trades more, in my view, is spiders, which are based on the SPX, right? So you get all those options, and a lot of them today was an expiration. So 60.25 maybe was in play today, and it closed right at it. See, closed right at it. So interesting day in terms of everything kind of coming together and seeing how the close was. Now we're going to try to just see, okay, what do we think for the opening? As is, the way that the RSI has been left, the way that the fibs are lining up, the way that the wave pattern is suggesting that we're likely to get some follow-through selling on Monday. And that suggests we're going to come down in an A, a B, and a C. So again, the only thing I could do, other side, only other way I could kind of mosh this around is an ABC A, so to take this down even another degree, an A, ABC B, and we're doing a C wave, just in case this turns into 5, ending here. So there's 2 ways to label it. Right now, I'm going to count it a double ABC. But it may just end up being a 5 wave, and then we've just got to adjust the internal labeling here, that this is a subminuet A within the minuet wave 2, and this is the subminuet wave B, and we get 5 waves down, which also makes total sense to me. So either one, interchangeable. Basically, though, I believe we head lower. We wrap up this minuet wave 2, likely early in the week, and then we pick up the rally again. That is, and I got to put big qualifiers around that because we're 3 weeks into this new administration, and there's been 3 different times where the market we come in on Sunday and it's gapped. We come in on Sunday and it gaps. I mean, we come in on Sunday with those of us that get up and watch the market or even trade on a Sunday. So do I think that we're going to here, and here? Should I think something different? Well, maybe, but I'm not going to. I think we will gap lower, starting with the futures market on Sunday. And then we'll see what happens on Monday morning. Now, RSI, not necessarily oversold, not necessarily anything, sitting kind of right in the middle. So that one, but edging its way down. Moving averages, edging their way down. The 200 is going to go flat here. So if we gap, then it'll turn. But if we tend to fool around up here, it's just going to go flat and provide support. Right now, it is providing support at 59.93 as of the close. That can change, obviously. Our fib levels, 60.23, which is basically where we closed, 59.99. One little 2 ticks above that 6,000 large gamma. We'll see if that changes when we get the new levels, which should be out, but I'll know them on Monday morning. Next below that, 59.75, then 59.40. These, I think, are levels if we can get a 1, 2, 3, 4, 5. If we're counting just the 5 waves down. Or we get a quick A, a B, and a C. So we'll see how it all pans out. But that's kind of my target area right now. Now, I don't know how long it's going to take. This one didn't take very long at all. Maybe this one won't either. We'll see. Over in the ES, kind of the same picture, actually. Here we are. I'm just going to stick with the 1-hour chart. There's minuet wave 1. I'd already marked this as of this morning. I'd already talked about it. We had an A, B, and then I did change it. Excuse me. I put the 1, 2, 1 ABC 2 here. And then I was labeling this possibly 1. But I remember talking about that. It's like, oh, that's problematic. Now, it just did not sit right. But I could have forced it, and I chose not to. And I think I left it open. So, as it turns out, let me just change this. I'm a stickler for perfection. There you go. Thank you. And came up with ABCX. And that basically just kind of keeps that 4th wave in place here. Because the alternate, and this also goes for the SPX, the alternate would be that this all the way down is minuet wave A of minute wave 4. And this is minuet wave B, and we're coming down in a C wave, which just is pretty ugly, if I have to say, which is why I'm sticking to what I got. So here, leaving the 4 in, 1, 2 still in play. And it keeps it a little bit different in terms of it's just going to be a short-term drop, like between Monday, Tuesday, Wednesday, maybe, or even less. And then we should start to rally again, keeping it in the current count of a minuet second wave. But here are our markers coming down. Now, 100%, wave 2, 100%. That one I can't, because then wave 2 would be taking over or going beyond wave 1. Can't go to that level. So let me just add this to what it can do. And that's going to be 0.882, 58.40. But when I look here, I'm like, okay, that I like the best. If again, ABC, X, or ABC, subminuet A, subminuet B, subminuet C to put a minuet 2, and this turns into 5. Or we get an ABC and it still turns into wave 2, and these would be subminuet degree coming down. So the same pattern. Let's see which one is the winner. Beyond this level, here's the end or the starting point for wave 1, which is 5809. So if we start coming down and we start breaking below there, then I got to take this back out and talk about this 4. That's where that would come in. That it's actually the minute wave 4 that's still in play. And this turns into minuet, wave A, minuet, wave B, and as ugly as it is, I'll show you how it can work. If this is a B wave, 1, 2, 1, 2, and we're going to break big. Okay, so these are the choices that I'm seeing right now in terms of what Elliot might be telling me. Now, the fibs would work in conjunction with one another, because if I have to add on top of this and go to here, where we are, that's the new low. If this 4 is going to come over to here, and I'm looking for this, now this is A, B, and we're looking for C wave 1, 2, 1, 2, 3, 4, 5 of 3. Or maybe that's got to come in here in a 4 and a 5. Or it's just A, B, and then we're doing a C wave down. But if it's a 4 and we're pulling it over, and this has got to be A, B, and we're doing a C wave, several ways I can get into it here. But it also still can be that this is B, and this all is a 5 wave. C wave, right? B, and this is C. 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. That could bring us down to there. One more I'll throw in there, and let's just see what happens. This is 1.618. I got it in there. It's sitting down here. So let me go back to that 4-hour chart. What does that look like on the alternate? Not real pretty. See how far that goes? So I'm back to how far up do I need to bump this correction? Which is why I'm kind of sticking with that minute 4 would maybe have to move over. Or right now, I'm hoping that it is all contained up here, and I can consider it the C wave or the double ABC, and we finish it up here, which is just going down, testing the 5,900 level, which, by the way, in the ES is 5,925. Now that is the put wall. I don't think the put wall's moved. It may have. I got to find out. I'm going to get the data. But if it hasn't, then it's 5,925 ES. And it would break. All right, 5,925 is just below that low. It could break real quick, slam down, and come back, just like it did here. Slam down, come back. So if it did it again and got down to here, bingo, wave 2, let's go. You never know. So I'm trying to lay out all the possibilities. Now, how was it trading today? Well, if you trade using fair value gaps, we had them. We had them today. Go read up about it, because fair value gap, it's like when a market just suddenly just slides, just moves upside or downside. And because there's nothing really in between. So there weren't any bids, there wasn't any real trading. It just goes so quickly, which it did on that initial move. It did. It just gave up the ghost. Let me kind of open this up so you can see that. There's that first move down. Wham! So you're looking at the possibility that somewhere in here, that it would be up to here. There's the gap. So you're going to go back up and fill that gap. It did. And then it drops again. So fair value gaps do come into play when we get large, unexpected moves such as we had here. So, in fact, this may have been a fair value gap because it kind of went up and then sank. That was the number. That was the consumer sentiment number, and also, but there was the one before, the wholesale inventories. Kind of come out and went whap, whap, and it also was the non-farm payrolls. That's what actually produced this one. And this one was the secondary one, took it up to the highs, and then whack. So that's kind of trying to put this whole picture together, piece by piece, incorporating everything that kind of took place. I wish I could just keep it purely technical. But when you get all this movement that just comes out of the blue, it really kind of shakes things up a little bit. So we do the best that we can, and I feel that this is a more palatable count. If we start to break down, folks, with some force below all of this, then you know I'm going to have to bump it. I'm going to have to bump up a degree on our correction. Okay? So I don't have those updated numbers, so I will be including the spot gamma levels on Monday morning's update. In the meantime, let's all try to have a really great weekend. And again, the next update will be on Monday morning.